The global car market is currently facing one of its most tense and uncertain periods in recent history. Major German automotive brands like Porsche and Mercedes have taken an unexpected stance, pushing back against former President Donald Trump's demands related to trade and production. For years, the Trump administration had pressured foreign car manufacturers to shift their operations to the United States. But recent statements from Europe have disrupted that narrative. Porsche, for example, firmly rejected the idea of manufacturing in the US, stating clearly that "we have no such plans." This declaration reportedly came as a wake-up call in Washington. So, how will this bold move, combined with ominous forecasts for the European steel industry and the risks posed by rising auto tariffs, impact the global economy? In this video, we'll break down the key developments shaping the automotive world. Be sure to subscribe, turn on notifications, and like this video to stay updated with our content. Germany, as Europe's largest economy, sits at the heart of the global automotive industry. Its iconic brands, Porsche, BMW, Mercedes, Audi, and Volkswagen, symbolize German industrial strength, exporting millions of vehicles worldwide. However, recent tariff increases imposed by the Trump administration have started to pressure these manufacturers. After targeting steel and aluminum, the US has expanded its tariff threats to include automobiles. Trump has argued that foreign automakers should invest in US-based production, offering tax incentives as a lure. But that hasn't appealed to everyone. German carmakers have deep roots in their home country. Moving operations overseas isn't as simple as closing one plant and opening another. It disrupts supply chains, impacts thousands of employees, weakens local economies, and could damage long-established brand identities. Porsche's firm no to Trump's request was not a quiet refusal. It was a loud and clear rejection. The company emphasized that remaining in Germany makes more strategic and financial sense, and that relocating production to the US would be both costly and structurally inefficient. Porsche, a brand synonymous with sports car excellence, shook the auto industry with this move. Meanwhile, Mercedes and Ford have reportedly been exploring ways to reach tariff agreements. According to sources like Clean Technica and Autoblog, executives from several automakers are seeking a compromise. The CEO of Mercedes, for instance, is in active discussions with US officials to secure a mutually beneficial deal, warning that without such a resolution, European exports to the US will suffer significantly. The European steel industry is also feeling the pressure. One senior official even warned that Trump's tariffs could decimate the sector. Since automobile production relies heavily on steel, these rising tariffs affect not just finished vehicles, but also raw material supply chains. Increased costs are trickling down to consumers, making European automakers less competitive in the US market. Germany's recent drop in export and production data shows just how serious the situation has become. Initially, fears over tariffs led companies to ramp up production and build up inventory, trying to get ahead of potential new costs. But as that initial urgency has faded, market uncertainty has disrupted normal sales and supply patterns. Even though the tariffs haven't fully kicked in yet, buyers remain cautious, unsure of what Trump's next move might be. German political and business leader Friedrich Merz has proposed a mechanism to help European automakers withstand any additional US tariffs. While this plan aims to protect the industry, it could also escalate tensions further, potentially sparking new trade battles. If the US hikes tariffs, Europe is likely to respond with countermeasures, making everyday consumers the ones who ultimately pay the price. As with the steel industry, there may be no real winner in this trade standoff, only economic fallout on both sides. The Trump administration continues to defend these policies domestically. For years, nationalist groups in the US have questioned why foreign companies make large profits through imports without investing in US production. This pressure has influenced Trump's approach. However, Porsche's and others' strong refusals to relocate suggest significant vulnerabilities in the US car market. If European brands begin to pull back, American consumers could face higher prices and fewer choices. Despite the growing costs and challenges of exporting from Europe, many manufacturers remain committed to staying in Germany. Industry leaders stress that shifting entire operations to another continent isn't a simple reaction to a temporary political situation. It's a far more complex and long-term decision. As a result, the tension we're seeing now may have lasting effects. Some companies, like Mercedes and Ford, are trying to find a middle path, hoping to avoid harsh tariffs without undergoing a complete overhaul of their global strategies. If Trump proceeds with tariffs that offer no mutual benefit, both sides could end up losing. European manufacturers are already grappling with high energy prices and inflation, and additional tariffs could intensify these issues. The consequences could be widespread: rising unemployment in Europe, weakening competition in the US market, and price hikes for both luxury and mid-range vehicles in America, ultimately changing consumer behavior. Investment decisions in the next generation of electric vehicles and battery technologies are also at stake. Whether these investments are made in the US or Europe may depend on which side can offer stronger incentives. While Tesla's dominance in the US EV market is well known, European companies are also influenced by incentives like green energy funding and sustainability programs. If the Trump administration aggressively pushes policies that say, manufacture in the US or lose incentives, some European companies may eventually comply. But Porsche's defiance could set a powerful precedent. With a strong, loyal customer base, especially in the luxury segment, there may be no urgent need for such brands to shift course. Many economists agree. In this growing trade conflict, consumers are more likely to lose than win. Higher car prices in the US, slowing production in Germany, disrupted supply chains, and the threat to European steel all have the potential to destabilize several industries. Trump's occasional comments like, "If we make a deal, the tariffs will be lifted," do little to calm the markets. Stability and predictability are key, yet these have been missing from the ongoing negotiations. One day, a deal seems possible. The next, tensions spike again. This uncertainty is forcing automakers and investors to hit the brakes. Plans for new model development, factory expansions, and even hiring are being put on hold. The latest export and production data from Germany confirms this slowdown. Initially, fear of tariffs led to a surge in production and stockpiling. Now, demand has cooled, and the market is in limbo, waiting for clarity. Unless both sides reach compromises or interim agreements soon, a new crisis in the transatlantic auto industry could emerge as we approach 2026. Porsche's rejection of US manufacturing demands, Mercedes' pursuit of a deal, and the looming threat of tariffs are all reshaping the American automotive landscape. The big question now is whether Europe will adapt to build resilience, or if global economic uncertainty will deepen further. What's your take on all of this? Let us know in the comments. Don't forget to subscribe to Torchpoint, turn on notifications, and stay tuned for more insights. Thanks for watching.